Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it.
Greetings, Algo Artisans. Nick here. It is Monday the 11th at 7 p.m. and we're going to do our weekly market forecast. We're going to take a look at the usual suspects today: NASDAQ, USDJPY, BTC/USD, EURUSD, GBPJPY, gold, and silver. And we're going to take a look at the possible trades that are coming up this week, as well as what I think is going to happen in the charts. Before we do that, take a look in the description. There is a link. It's a free algo. I put it together for you. It's just a quick video where I show you how to build a very basic algo, how I turn it into code using Grok AI, and I show you the tools that traders use to connect that algo to their exchange so it can be the heart and soul of an agentic trading bot, right? You want to do agentic trading. You want to have it trade for you. This is the heart and soul of that trading, and we show you the tools traders use to do it. You do have to optimize the algo before you run it. It's not plug and play that way, but it's pretty close. In the meantime, let's go ahead and take a look over at the economic news coming out this week over at forexfactory.com. Okay, so Tuesday, 8:30 a.m. EST is the big news. It's the core CPI and the other CPI data, and then is the Fed chair nomination vote. I might recommend staying away from trading until all that's done, although I think Kevin Warsh is a shoo-in for the position. CPI itself could be a bit unpredictable. Hard to know what that's going to be saying, whether it's going to suggest a rate hike, rate cut, or anything else. So trading right before that can be very dangerous. Once it comes out, might be able to ride some of that volatility. And I don't think the Fed chair nomination vote is going to be a big surprise, but it could be an excuse to move the markets around and mess with your trades. So I'd be very careful trading tomorrow. And you see on the charts that I have that CPI marked out on the calendar just for that reason. Let's move on to Wednesday, 8:30 a.m. EST is the PPI. That's the Producer Price Index. Very similar to CPI with very similar effects. Hard to know how that's going to come out. Same rules apply. I wouldn't be trading right before. I might wait until it's done, let the market absorb the news a little bit and take trades based on that volatility. 2 a.m. EST, Wednesday, we have the British GDP data coming out, so trading the pound can get tricky, or if you're trading anything on the FTSE. Thursday, 8:30 a.m. EST is core retail sales data and all the other retail sales data coming out. So same kind of thing applies to CPI, just not as strong. Chances are not as strong, but I would stay away right before that comes out. Let the data come out, absorb the news, trade the volatility. And that's pretty much it for news for the week. So it will be a relatively quiet week for news. However, CPI and PPI are huge bits of news. Let's go ahead and move over to the charts, and we'll start with the NASDAQ. NASDAQ, you see predictions all over the place, right? Because it's really tricky right now. It's really facing a time of exuberance. It's facing FOMO. Everybody's getting into the NASDAQ. Everybody's going long. And if I zoom out here, you see that they have been going long since March 30th, which is around the time that we had the beginnings of the ceasefire over in Hormuz Strait. And so for the price to really just rocket up like this, there is going to be a significant pullback at some point. We don't have any idea when that's going to be. So all of these images, all these arrows or these paths that I drew are assuming no major pullback. And if there is a pullback, it'll happen at a local area, but any major pullback could just completely throw this off. It's really even difficult to predict what this is going to do in a high time frame because we don't have a lot of structure to work with. It has just been grinding up without any kind of pullbacks, not giving us a lot of clues as to what's going to happen. I would just simply avoid going short on this right now because the shorts continue to get wrecked. I see people complain on Twitter. I would look at some pullbacks as possible long spots. The first one being 28,950, 960, right about there. And if I were to take a trade, it would be in that area and it might look something like this. Now, if I were to choose some targets, it would be Fibonacci based. So I would have to, let's just say, wait for the pullback to measure this properly, but let's pretend the pullback happened right now. I would go from the bottom to the top of this most recent move, and I would look for a target right here at about 30,000. 30,000 is a nice round number. Therefore, it's a good place to look for targets, right? The trick is we don't know when it's going to pull back yet. So trying to choose targets in this environment is very difficult on a lower time frame. This is why I just simply will wait for the pullback to make that plan. Another great place to look for a long, if it happens, is a pullback to this lower level that you see right here at 28,000. 50. That's a good solid level. If price remains very bullish, it's probably going to bounce at that time. And again, in order to measure that properly, we'd have to know where it pulls back as far as getting targets out of it, right? So a decent target though is this bit of structure up there. If I were to enter right here, the stop loss would be based on whatever happens at the time. Might be a little thinner, might be thicker, hard to say, but I would look for a target just below 28,960, probably at about 28,900, be out of that trade by then. So a couple trades in NASDAQ possible. We won both the trades last week on the NASDAQ. Both trades I predicted came out perfectly. Of course, this week you can see this line right here. That's the CPI. Anything can happen this week. So got to be really careful with that. Let's move on to USDJPY. Okay, so I put the word intervention on here. You can see these big moves down and these crazy looking wicks down. The Bank of Japan has been intervening at tens of billions of dollars at a time, selling US debt, buying the Japanese currency to keep it strong. And they don't want it to go to 160. So if you do see the USDJPY get all the way up to 160, be ready to short because Japan's probably going to do it for you, right? And what I mean by short is go short the dollar long the yen. I don't know that it's going to make it up there. We have seen suspected interventions 1, 2, 3, 4, 5 times, and maybe a couple small ones right there as well. It's actually impossible to know which one of these are interventions, but the chart is pretty clear. And what's clear about it is that this can just happen at any time without any kind of warning, right? So be really careful trading the JPY. I would be managing positions with any JPY pairs. And I probably would just be scalping, pulling money out really quick. And that's why I didn't really draw anything on here. If I were to try to plan a trade, if anything, it will be cheaper for them to intervene if price can make its way all the way up to this area. So if I were to take a trade, I would be really, really careful about that. I probably would never do this. But if I had to take a trade, if someone put a gun to my head and said, take a trade on the JPY and the USD, I would do it like this. I'd let price get to a level like this, and I'd look to take a short and probably take it all the way down to this level where price continues to go down. So the level at the short is right there at 157.94. Stop loss would be based on the structure at the time. And then we have the support down here, which is roughly 155.47. I probably would be out of the trade by 155.77, something along these lines. I doubt this will happen. I would never take this trade, but for those who want to know what the most likely way to win is, I think that's it at this time. Let's go ahead and take a look at BTC USD, aka the Bitcoin. The Bitcoin bullish high time frame taking a break though, so we're looking at what might be a range starting to build between 79,500 or so and this top level right here, which is 82,800. So we might see a range build in this area right about here. Until it breaks out of this general area, we don't know which way it's going to go. I can tell you price is still high time frame a bit bullish. Now, super high time frame, actually, it's bearish, but say on the daily, if you look at the stack, you can actually see that things are a bit bullish. Let me zoom out to show that to you. So even the daily and the weekly are both exhibiting a fair amount of bullishness. So I definitely would not be looking to short high time frame. I would be interested in catching a small short maybe at this major structure right here, which is at 82,850, but I'd do that on a lower time frame and I'd be taking some low time frame targets with, stops that apply to that time frame. But what I'd really look for as far as a trade on this, depending on if CPI can make this happen or just natural price action, I look for a break above 82.8, and I think price is going to go all the way up to 88,000, which means I would look to enter along. The plan would be, let me just show you the whole plan. I'd enter along after a breakout, get a pullback, and let it break above that local high, right? So let me paint this like that, and I would enter around that time. After the pullback, stop would be based on the pullback and some structure, and I would be out of this thing by 87,500. So that's what the Bitcoin trade might look like. But again, with CPI in the mix, it's really, really tough to have any idea what's going to happen. But a breakout and a play like this might be the way to go. And by the way, it might be a far better risk to reward than what I just drew. I'm just kind of throwing this together right now, right? So we can see like a 3-4 to 1. It'd be a big trade. Let's take a look at the euro. EURUSD already starting to do what I thought it would do based on when I started this drawing. We can see this go ahead and crawl up. I think we're going to see this break the local resistance, which really is at $117.88 to the euro, but you have another sneaky resistance sitting up at 117.973, that blue line right there. So if price can break above these though, you do have a fair amount of space to ride a trade up, and that I think is the trade I would take. So I would look for a breakout, a pullback like we talked about on the last chart, that same kind of way of taking the trade, a little bit of a pullback, and I probably would ride it all the way up to this level, which the level I would definitely be out by is 118,470 or so, but I'd be out probably like 118 like 43, or I should say 118,437 if you want to say it the same way, but it's really 118.44, 118.43, and the stop loss would be just based on whatever happens with the structure. So that's probably the trade I would look for, and I'd be real careful about doing that until CPI is already out, and PPI is actually pretty dangerous too. So, it's a tricky week for anything besides scalping, but once PPI is out, it might be a good time to start looking for trades you can hold for a couple of days, right? Let's look at GBPJPY. Yet another JPY trade. I have interventions written there very clearly. And look, I'm just going to be very simple about this. If I see price go to any important level, so whether it heads, but it's really there right now, kind of, right? So if you look at these prior levels, you can see that it rejected here and here. So we're right around this area where the Bank of Japan could intervene. The problem is you don't know when this is going to happen. It's really difficult. But if they did intervene, price might nuke down to this sort of 210, 660 level, right? And maybe along there might be the way to go. So that might be the way to look at it. Something like that's probably the safest play. And really, if I were being honest with USDJPY, the safest play probably would be a similar. Not to look for the intervention because it's like very difficult to even time that. On second thought, midstream, mid-show, I'm going to show you what I would prefer to do is look for the nuke down to the 155.47-ish area, grab a long right about there, have my stop loss a little below, and then take my profit, probably like 157.70 before this structure, which the structure is at 157.94, right? It's from that prior, the prior rejection right there. So I have the profit taken out before that, out of the trade. If I had to trade it, that's what I do. I'm not terribly interested in doing that. Lots of trades to be had out there outside of JPY pairs, unless I'm scalping. Another story altogether. Precious metals looking pretty good. Gold's breaking out right now, it seems. I thought it was going to bounce around a little bit, but it does look as if it actually will continue to go up and break above this local structure, which is 47.72-ish. Really, it's 47.68, and it's already above that level. So really, not a bad trade to take is like right here. Now, of course, CPI being in something like 12 hours could really throw this off, but this is not a bad trade right here. Just right there. As soon as price can kind of come up, give us a little pullback, get a nice entry. If the pullback is tight, might even get away with a tighter stop. But that's probably the trade, and I would be out by this key level of 48.97. I'd probably be out by 48.92, something like this. Okay, so that would be the plan. Silver looking very similar. Even more volatile than gold. Local resistance is $90. So if price got to 90, not a bad place to look to actually go short. Might see a nice pullback on that. But if it decides to head up, then you could take your lump and go ahead and grab the long, right? So short works out, maybe, maybe not. If it breaks up, or if you happen to take profit or not take a loss, or even if you do take a loss, wait for that breakout, get the little pullback, and I would be looking to grab along up to this level, which the resistance is up at $96. And that is a very important number. And I'd be out by, maybe like low 96s. The real resistance is up at like 96.70. I probably would be out at like 95.90. 95.70, something like that. Just play it safe. Now, we'll back out a little bit because 96 is a very important number with silver. You see, it is the highest move up on the way down. If price can't break that this week, there's a good chance silver is going to start to gain some steam and head towards the high of 120, and gold would be doing probably the same thing. So that's it. This is what we do. We look at the charts. We predict where price is going to go, when it's going to get there. And because we have that information and we are statistically correct to a certain degree, we can predict how much profit we can extract from the market. We teach you how to do this. If you look in the description, there is a link. Like I said earlier, it is a free algorithm. I built it. It's a quick video. It's very fast. Shows you how to build a basic algorithm. Use Grok AI to turn it into code. And then I show you the tools that traders use to connect that algorithm to their exchange. Now, you do have to optimize the algorithm before you trade it. it. You have to actually study it. We teach you how to do that over at algofactory.tech, right? But the video does show you how traders connect the algo to their brokers so it can trade without them. They could be sleeping, golfing, whatever it is they like to do in their spare time, making money while they're not sitting at the machine. Teach you how to do all that stuff. As a matter of fact, we're going to go ahead and be on tomorrow live, Tuesday, Wednesday, Thursday, 8:30 a.m. EST. So join us there. If you have something you want us to chart, leave a note in the comments. Say, I want you to chart Amazon or whatever it might be. Be happy to do that for you. We'll see you soon. Algo Factory.tech. Learn how to trade like a hedge fund pro.